Good morning, everyone, and welcome to the Axis Securities Morning Podcast. Today is Friday, 20th December, and the time is 7:30 a.m. The rebound attempt by US stocks failed at the close as traders continued to dissect the implications of the Federal Reserve's actions from Wednesday. The S&P 500 erased all of its gains to finish 0.1% lower. The Nasdaq declined 0.5%, and the Dow ended in the green to finally erase a losing streak that was the worst in 50 years. Meanwhile, US GDP came in at 3.1% in the third quarter, while jobless claims decreased, bolstering the view that the economy remains strong. In movers, the US 10-year yield rose to 4.6%, Bitcoin slumped for a second straight day, gold headed for a 2% weekly drop, and oil slipped back under $70 as the dollar continued its ascent. Back home, the rupee sank and closed under 85 for the first time ever, with market participants expecting the dollar to reach 86 by the end of March. While the RBI is expected to contain any undue volatility, there could really be a limit to how much they can intervene given the drop in the Chinese yuan, as artificially propping up the rupee would widen our trade deficit with China. Coming to stocks, the Nifty fell 1% while the India VIX was little changed. The benchmark is now on a 4-day losing streak and has completely unwound all of its gains seen from the November expiration cycle. Only one of the 12 sectors, pharma, was the gainer at 1.7%. IT suffered the biggest hit as it sank 1.3%. Breadth was negative as 14 stocks rose and 36 fell. Dr. Reddy was the day's best performer as it rose 4%, while Bajaj Finserv led on the downside with a 2.5% loss. Elsewhere, mid-caps and small-caps ended in the red but were well off their session lows. Technically speaking, yesterday's lows have been seen at an important juncture where a key Fibonacci level coincides with a rising 200-day average and the low from last month's expiry day price action. Immediate support lies between 23,644 and 23,776, while a near-term barrier exists at 24,060 followed by 24,200. Speaking flows, foreigners withdrew over 900 crores on Wednesday as per CDSL data. On a month-to-date basis, the inflow number now stands at nearly 23,600 crores. On to derivatives now, the Nifty's put-call ratio jumped to 0.74 from 0.55, while that of the bank Nifty's remained flat at 0.52. Over 17 lakh contracts of Nifty calls were liquidated, while a similar number of puts were added and implied volatility jumped, meaning that call sellers covered their positions back as they went deep in the money with yesterday's drop. The FII index futures long-short ratio fell for the fourth day as it went from 0.54 to 0.48, with foreigners continuing to remain pessimistic. Looking at options concentration for the weekly contract that expires on the 26th, the trackable range has moved further south to 23,500 to 24,300, as call strikes closer to the spot are seeing more interest from people with a bearish outlook. Speaking participant sentiment for derivatives, foreigners continue to remain bearish, while retail and prop traders are positioned for a tactical rebound. Looking ahead, the GIFT Nifty was down 70 points. Talking stocks, Apollo Tyres and Redington were at horizontal support, while Alok Industries and Sundaram Finance were at horizontal resistance. Bajaj Finserv, Federal Bank and HCL Tech were at trendline support, while Abbott India, Equitas and ITC were at trendline resistance. Talking key moving averages, 48%, 40% and 55% of stocks were above their respective 50, 100 and 200-day moving averages. Core PCE data and University of Michigan sentiment readings will be released today. That's a wrap on the day's podcast. Thanks for your time. Enjoy the Friday and have a great weekend.